Hi and welcome back to Cheeky Crypto. My name is Nick and today guys we're going to be jumping down into the world of Polygon's Matic, taking a look at the most recent price action and what I think is likely to happen next. As I get into today's video, if you do find it useful and informative, smash that like button. I do appreciate that. If you are new to the channel, then why not go ahead and subscribe, tap the bell, select all the notifications, and in doing so you will be kept up to date with everything that we do here at Cheeky Crypto. If you haven't yet joined us in Discord, what are you waiting for? Check it out. The link for that is down below. It's a fantastic community talking crypto 24/7. It's completely free, and I don't think you'll be disappointed by what you find down there. So why not go ahead and check it out? Let's jump right down into today's video, kicking things off with the 1 hour time frame. Some interesting developments with price structure. So let's get right down into this, right? So Smart Money Concepts is telling us that we are now in a bearish structure. So that is right here. You can see this change of characterization happened on the 9th of October at 10 a.m. UTC +1. And so we can see here we've had this pretty big slip to the downside and some interesting developments within here. So we can see that we have a 5-wave move to the downside over here. You can see the extension in the wave 5 just over here, and we can have the bounce upwards again, pretty typical of a wave 2. So if we go ahead and take a look at our retracement here, you can see that it rallied up quite a bit and retraced just up to and got rejected from that 618 area, and then we start to move on down. Now if I measure the distance starting at the bottom to the top here, move this fib over to our bounce, and we can see that we came down very aggressively towards our 1.618, but we're not there just yet, which essentially means that it looks like we are still within our wave 3, and this little move up here is our wave 4. So let me show you what I mean. So here we can see we had the wave 1, wave 2, all of this is wave 3, up here for 4, got to come down into 5. All of this is going to basically be a wave 3. 1, 2, all of this is wave 3, we'll bounce for a 4 and we'll come down into 5. This is very similar to Bitcoin. In fact, it's pretty much identical, I would say, to how kind of Bitcoin is kind of going at the moment. So we can see here it's a 5-3-5 on the horizon, up into another move, so another 3-wave move bounce to the upside, and then another 5-wave down. That's an impulsive breakdown on Matic, okay? And so let's go ahead and not worry about this count and just worry about and focus in on this little wave 4 that we find ourselves in right now. Okay, where is this going? Well, it looks like to me that we may push up and test that 200 EMA. It might be a push a little bit higher, but if we have already finished, which it's possible that we have, then our next breakdown is likely to be pushing the price action right down into this low range here between 48.6901 and 49.5529. Okay, and obviously our 1.618 comes in right here at 49.7387. Okay, so we know that we are very, very close to basically having that kind of complete out where it needs to be. So what I'm going to do is I'm going to mark this up as a template for the 1.618. We're just going to do that there, and then I'm going to remove this one so we don't need it. So you know the white line is basically going to trigger a bigger, deeper, impulsive structural move to the downside, and our target range is there between 48.69 and 49.55. Okay, so that's going to be the hourly chart. We essentially are looking for a break to the downside. Momentum is a little bit all over the place, which means after we complete this kind of move, we are expecting a more significant bounce for that next wave 4. That can actually rally up quite a bit. Invalidation on that bigger, deeper move comes in at 54.4. Or 4.0, I should say, so 54.40. So we know that that's going to be the invalidation of that wave 4. So it can be a pretty significant surge before we drop back down. I think the bigger swing in the market, though, is going to come once we complete that bigger 5th wave movement, which brings us over into our daily chart. As you can kind of see here, our daily chart is targeting out the idea of between 35.9415, if I can get my words that, to 44.5484. And so this is our target range for our 5th wave move to the downside. And I think we're really only going to tap into the upper range of this to complete this 5th wave movement. And then we're going to look for a significant surge to the upside. Now, this next surge to the upside can go anywhere as high as 156.79. So you can see a very, very significant surge potentially here, upwards of a few 100%. So we know that there's going to be a significant pump to the upside. I don't think we're going to be pushing that that high personally, but I'm taking a look at things at around 76 cents and say, well, that's a major area of resistance and a pretty lucrative bounce from this low range that we're looking to target. So if we were to kind of see that, we are talking around a 60 to 70% move to the upside of Polygon schematic. It could be very, very lucrative. Okay, so we have to appreciate that we have to kind of move down first. Once we complete this out, we're into really good long positions that could be very, very lucrative in terms of short-term trading opportunities. Now, obviously, I'm not a financial advisor. I cannot give you financial advice. All I can do is give you my thoughts and opinions on the data in the charts as I personally would see it. And if you do have access to a financial advisor, you should probably consult them, because obviously I'm just a guy on YouTube, right? I'm not a financial advisor. And so none of the information I'm giving you here is for trading purposes for you. This is kind of how I look at the market and how I am going to be trading the market personally. So as we kind of take a look at this, we can kind of say, okay, well, cool. There's a good opportunity for going long, and we actually have a pretty reasonable, good kind of stop loss opportunity here as well. Let's say we hypothetically do want to target out that area of resistance right up here at around 75 cents. Well, where's our stop loss going to be? Well, our stop loss is going to have to go down just lower than this swing low. Okay, down here, that's going to be a nice safe area around 31 cents, in my opinion, anyway. And it's going to be a 2.3 risk reward ratio. And of course, as we start to go into profit, we can lift our stop loss, put our stop loss into profit, do a trailing stop, all those kind of fun little things that will allow us to make sure that we book in profit as we kind of get this next bounce to the upside. Now, this bounce to the upside is going to be a significant while down the line. This isn't something that's going to happen instantaneous. It's not happening today. It's not happening tomorrow. It's probably not going to happen next week. But my point here is that there's going to be a really good opportunity to go long on Polygon schematic, but we have to first go down a little bit deeper. And we're not talking about going massively down either. We only have to drop a few more percentage points before we can actually start to appreciate this next move to the upside. Our minimum expectations on this fifth wave have already been met. I just think we have a little bit more to go. Okay, so once we kind of finish this off, I think we're then going to be looking for some really sweet long positions on Polygon schematic. But obviously, that move to the upside is, again, something that we have to take into context. Yes, it's going to potentially be pretty lucrative on a bounce to the upside in the coming weeks and months. But if we take a look at this from a monthly standpoint, we are still looking for deeper bear market low points in the future. And we are several months out from this one. Now, the lows on this are insane. People will call me insane. People will call me all sorts of different names under the sun. But technically speaking, we are on a trajectory for 10 to 17 cents. Now, personally, I think a double bottom would be the area that I'd like to find good support on. But if we do lose the 31.6 low, then essentially we are looking for slightly deeper in price action. And of course, Polygon schematic is on this path towards 10 to 17 cents. This is something that I've been talking about quite aggressively for quite some time. We had the 5-wave move here, the 3-wave move up. We are looking for the 5-wave move down. We can't start 5 waves without going and ending in a 5-wave pan. So it's inevitable that we have to break on down in a 5-wave structure, which I think is what we are seeing anyway. We are just not quite where we need to be just yet. So we are looking for further downside on Polygon schematic. It is kind of bearish at 10 to 17 cents, but what an opportunity that would present itself. So whether you choose to like it or not, it's entirely up to you. But this is kind of what the data is suggesting to me. We are basically essentially looking for significant selling pressure for Polygon schematic. On this weekly time frame, we can see that we are below that of the 200 EMA, the 50 EMA, and the 50 SMA. Volumes are low. We have momentum kind of shifting all over the place, but we are looking for that bounce on the daily time frame. So, for now, I would like to think that 31.6 can be a double bottom and hold. If it doesn't, then 17 cents is going to be the target range that I'm going to be calling for. So I think, guys, that's going to wrap up today's video on Matic. If you have found it useful and informative, smash that like button. I do appreciate that. If you are new to the channel, then why not go ahead and subscribe, tap the bell, select all the notifications, and in doing so, you will be kept up to date with everything that we do here at Cheeky Crypto. Until the next one, though, guys, have a fantastic day.